This is Alan Bush with ADMIS with the daily financial forecast for Thursday, May 5th. Starting out with the stock index futures, we are seeing higher prices. Much of this linked to crude oil that is as much as $1.90 higher. In fact, it was over $2 higher in the overnight trade. Also, some of the strength, though, limited by jobless claims coming in higher than expected. We do feel that longer-term stock index futures will continue to advance, especially in this low interest rate environment from a global point of view. Also, we do believe that indices will be higher across the board for the year. So any weakness on any type of bearish news, I believe, should be used as a buying opportunity. Now, moving over to the currencies, the dollar index is higher now for a third day. And much of the strength over the last couple of days linked to comments from two Fed officials indicating that, in their opinion, there is still a possibility that the Fed could raise interest rates at the June meeting. So that was very supportive to the dollar index. Also, there's a rule of thumb that anytime there's a headline in any of the markets, in this case in the dollar index, that is a front page headline, often that comes at the end of a move, and that just may be the case for the dollar index. This is the headline that was in the Financial Times yesterday, talking about the dollar and the troubles that it has had. So we do have a front page article on the dollar index after an extended decline. This tells me that we may be near the end of the move in the dollar index, at least to the downside. And of course, now we do have some better prices. So this is a short-term move. I don't think it's any type of new extended situation that we are likely to see. But for now, it looks like the dollar index has bottomed. Also, we are seeing the pound a little bit lower. We did have some weaker than expected economic news out of the UK. Also, the leave vote, as far as the UK leaving the European Union, seems to be gaining a bit more traction. So that should be viewed as a bit of a negative for the pound. So the one currency that we would be trading from the short side is the British pound, with political problems likely to be a negative for the intermediate term. Don't forget the June referendum will be with us and become more and more important as we get closer to the June 23rd referendum date. Also, we're seeing the commodity currencies, the Australian dollar and the Canadian dollar, advancing, this in conjunction with higher energy prices. Also, the Australian dollar receiving a bit of an extra boost, this due to news that retail sales in Australia came in better than expected. And in the interest rate futures markets, a little pressure developing. This would be the normal reaction to higher stock indices and higher energy prices, although some of the pressure limited by the jobless claims report that came in above expectations. Longer term, though, we're starting to feel that the bonds may come under pressure as global core inflation rates start to increase. And I think that even though that rate of increase is rather slow now, it is likely to accelerate in months and years to come. And also in the metals markets, especially the precious metals, if we are right that inflation is coming back and is to accelerate, the gold and the silver should be performing extremely well. I think we can see over the next couple of weeks a move back to over the highs in both gold and silver. So continue to trade gold and silver from the long side. There's a lot left to the upside, and I think this is a trend that will last for many months. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.